Okay, I think we are on. So, hello to you all once again. Today is going to be a special stream. In this case, I'm going to make a full educational stream. And I know many of you, especially beginners to medium level traders, you ask me always in what consists, of good and full trading plan and what you should respect and what you should follow in order, to have those rules which you would be able to follow them daily and put them in practice. And this way, so you can set up your own, your own path to success. So because of this, I put up together most of the knowledge that I had used in the past as well for myself. Right now, of course, they are automatically made by myself, since I practice them for such a big amount of time. So, and I hope, I hope they can help for you as well, and they can serve, like a good base, like I said, for this situation. So yeah, give me one moment. I want to prepare everything here. I want to prepare better the screen and the chart, so we can have something like this. So I'm open here like always. I'm going to do the. I'm going to speak on the. With what we are doing. I can keep something like this. I want to see the mark there as well. So yeah. Not what we are here, let's get on with it. So in this case, initially, since I started as well initially with the forex, most of the lessons are going to be for the forex market, but at the same time, you can practice those and you can put them in practice, with stock market, crypto, futures, commodities, and so on. So yeah, we have here the complete trading plan. So in this case, the lessons which you are going to have are how, so of course, getting started, with the initial data. After that, I'm going to go into the trading agenda. After trading agenda, we are going to go into the application of the agenda, how to design a design for fortune, and application of the design, and lastly I'm going to exit with some hi, there is going to be around 2 hours more or less. I believe this course is going to take unnecessary exercises. Exercises. Okay, so this is going to be, but don't worry if you cannot watch it now. I'm always saving the VODs, so you can watch it whenever you have the time and for it. So yeah, in general, from now on, I decided, most of my beginner to medium level entry courses are going to be for free, and I'm going to stream them for free in the training view. However, the more advanced ones, they are going to be for payment, and they are going to be in my website, which can be found here as well. Anyway, so let's get on with it. So yeah, you will see that as we will go through these lessons, this plan that I'm going to teach you, I hope you are going to use for the rest of your life, or at least for the rest of your trading life, or trading path. And at the same time, I want you to understand that, of course, some of these situations and some of these points that you are going to see, you can adapt them and you can change them. They are not written in stone. So I want in the end you to be comfortable with what you are doing, and I want you to be to at the same time to be dynamic. So don't think them exactly like 100% like they are. You can always adapt them. So now I'm going to enter into a little bit into it, like importance of a trading plan. So why is important, to a trading plan? Well, first of all, it's going to hold us accountable. So only us and only us, we are going to be the responsible both for winning and for losing. And at the same time, it's like a map which followed sets a standard for consistency, you know, and shows us areas which require improvement, you know. So by having a plan, we can see what we are doing good and what we are doing wrong, and most important, it can help us to see which of these bad stuff we are doing, so we can improve them, and you know, don't repeat again that mistake. You know, it's being said that smart people, in the definition, you know, the psychology of a smart person is the capacity of acknowledging its own mistakes and get over them and learning from them to not repeat them again. And at the same time, you know, this trading plan is going to serve us, it will serve as a communication with the market. And this is going to be kind of like the sentimental analysis. But anyway, I'll get more into it the more we are going to progress. And at the same time, a full trading plan is going to include inside times for you to go back and look through the data and to see what our trading has provided us. Because of this, we are going to be able to review that data, and by doing that, it's a responsibility that in general, I would say most, if not all, the disciplined trainers and all the professionals, you know, hold themselves accountable to. What does it mean is that rather than simply showing up day and trading, each day and trading whatever is presented in front of us, we will show us to a terminal. And with this one, you are going to be able to see, you know, these trades. Like for example, in my case, as you may know, for example, most of my boats, like I have, for example, for the, and I'll start to have to do this publicly as well. So you see, for example, each of these trades that is being made, you can see we have this is a part of the trading plan, because we are reviewing here the entry, the exits, you know, what's happened, and why it went long, why it went short, and so on. But however, you cannot apply entirely this perspective here, because this is an automation of a set of rules and logic that you have. However, yes, you can optimize the data and you can optimize all that stuff, but that's another story. I'm trying to teach you more, you know, I want you to start slowly, and first I want you to at the same time understand how to do manual trading. I don't want you just to be you holding, you know, with a boat and all automation and expect all of that to do all the work for you. Yeah, sure, if you don't have the time and stuff like that, it's an idea, but at the same time I want to teach people how to properly trade and how to properly use, you know, these tools that we have available for trading. And actually, just a side, looks like finally we broke the 1.9 thousand, which I predicted this morning. Very, very nice. Anyway, let's continue. So at the same time, as like I said, this trading plan is going to give us the consistency and the direction for our trading. At the same time, like I said previously here with the sentimental analysis, a complete trading plan is going to help us develop and keep the sentimental analysis with our pairs, you know. So just like with the relationship, if we do not communicate and spend time with a loved one, we will not know what is happening in their lives. The same is happening in trading. If we are not in the charts spending times with the patterns, candle formation, you know, looking at the technical indicators, volumes, markets, follow, and so on, we will not understand the intention of the market. So you have to treat the trading relation as you would treat your love relation, you know. Like I said, if you don't communicate and spend time with your loved ones, bad things will follow. So these rules, the same can be applied, you know, for the trading. And many of these lessons that we have to day by day, they can be applied at the same time, you know, in the trading. This is one of them. So yeah, I want to finish this part by saying, you know, one of the mentors that I am using for myself. Well, I would say it's a mentor because his book was the first one that I actually read when I started So Benjamin Franklin, quote, "He who fails to plan is planning to fail." So without a plan, pretty sure sooner or later you are going to fail in this case. So yeah, the processes that we are going to have, let's go and get started with it. So we are going to have the next series of processes. So we are going to acquire knowledge, we are going to organize that knowledge, we will learn how to use and apply the knowledge, and lastly we will analyze the knowledge. Okay, imagine this: from a buzzing teenager job to a lifelong career, training is necessary. In this case, training is acquiring knowledge. This is training. You know, the more look at all these like all these sports guys or musicians or actors or medicine or engineers or whatsoever, the more you train in something, the better you are, right? You know, so the same here as well. Although we can acquire basic knowledge of Forex for free from various internet resources, you know, to become a professional full-time trader, you will need to find a mentor or some educative system, which for example is what I'm trying to provide right now. Hello there. So organize. So, you know, there is a lot of information in the internet, and I want you to learn how to differentiate between the good information and the bad information, you know. So yeah, the first step of this is going to revolve of this revolving cycle is not finished after the initial acquisition of this Forex knowledge. Like I said previously, a trading plan is like map direction us to areas which needs improvement, you know. So through these steps of organizing, of using and analyzing the knowledge, we will understand, you know, that area of us which is going to require the improvement, you know. So even if we acquire our knowledge through the best and the most organized trading educational systems, we will still need to learn how to organize that knowledge. So this is the trading system that we are going to have, so to fit our needs. So these lessons which I'm going to tell you right now, they are going to help you with that. So in this case, the organized knowledge includes knowing, like for example, trading system, and this is going to be like what type of trader you are or you want to be. Because for example, let's say you are working, you have a job, but you want to be a scalper or a day trader. A little bit unfortunate, and you cannot do that. So you'll have to adapt on that situation. You know, you have to adapt on that situation as well. Give me one moment, please. So yeah, at the same time, like I said, know which assets or pairs you want to trade. It's very important. You know, I don't want you to start chasing for 100 horses. Instead, keep one or two. Better, you know. So it's also very, very important. You have to understand as well, you know, here is the risk management as well, and many other stuff. Now, using or applying our knowledge, let's go like that, means following with strict discipline, you know, the steps from the second point. Means following with full discipline the steps from organize. Okay, step 2. So it's important to know that this must be done in a live market settings. Although, you know, I recommend at the same time, of course, for the first part to use a training account, a demo account or something like that, and you can acquire that knowledge, you know, without spending real money. You know, in the end, you have to start to combine that psychological factor as well. You know, slowly. You don't have to go with $1 million account. You can start with 100, 1,000, whatever you have, and you are available, you know, to lose it. So if you don't have enough money or you are still not confident enough, you know, you just have to remember that, like I said, you can just start with a very small account and you can risk a very, very small position. Also, this is going to come from the risk management, which I'm going to explain later on. So at the same time, you know, the more we apply, you know, the knowledge that we have in an organized manner, we will have more and more trading success, and also failures, which this is going to serve as our data, you know. And to grow and improve as a trader, you must analyze that data, you know. So without seeing, you know, what you have done, like I repeat one more time, what you did wrong or what you did good, you are not going to know what you should do in the future, you know. So that's going to be the part of analyzing the knowledge, like looking at the trades and learning from what you did good and bad. I know it's pretty self-explanatory, but most of the people, you know, they kind of fail with this type of stuff, unfortunately, you know, but yeah. So this is going to be our base. Now let's go more in depth, you know, into each and any one of them. So here we go. Let's go with the trading agenda and how we can make, you know, that trading agenda. So like I said initially, we are going to start. I wanted to make this for the Forex, however you can apply this type of stuff, you know, for the other ones, but in this case, for example, let's start with the Forex. So Forex, I don't know if many of you know, it has 3 regions, and those regions are going to be Australia, Asia, then we have Europe, and then we have lastly North America. And in Australia, Asia, we are going to have Sydney and Tokyo session. In Europe, we are going to have London and Berlin lately as well, but mostly are trading the London. Maybe let's just put the basic, I'm not going to overcomplicate myself too much. And of course, New York, we have this one. So although it's a 24 hours market, you know, from Monday to Friday, you can also, yeah, of course, in the weekends, stuff like that. But I want you to understand this one. Like for example, if you are in Australia, Asia, you know, it's best to trade Audi, NZD, Japanese pairs. If you are in Europe, it's best to trade Euro, GBP or CHF. And if you are in New York, it's best to trade USD and Canadian. I want you to understand, you know, these initial rules. That doesn't mean you cannot trade the others, but I mean because of the volatility that it is much higher, you know, for these coins when these sessions are going to be open, it's much more percentage wise that the direction of those is going to go in that direction or not, you know. So yeah, that's going to be in terms of the regions. Now in terms of the traders types, I know that we have the the typical day trader, however, scalper and so on, but in this case I'm going to put another type. So we are going to have a pair trader. So this one knows is going to trade, for example, 1 to 4 pairs, you know. Then we have the pattern trader. The pattern trader, you know, in general, just like the title says, it doesn't have just 1 or 2 pairs, but in general it looks through all the pairs, you know. It's monitor much more pairs and looks for patterns. I'm going to explain the patterns later on. A session, or this is kind of like a day trader, I would say, or session trader. trades every day, every week, the same hours of the day. No, and yeah, in general, it's looking for opportunities. Sometimes it might trade only the pairs that are for his sessions or her sessions. However, they can also go, and maybe look for multiple pairs that maybe not initially belongs, to its session. So that's another one that can be done. And then we have the last one of the alert trader. So the alert trader, it's kind of like bots. So, or aka automation. So this one in general, but this is kind of like the expert level. In general, I recommend to have either a fully tested, qualified bot, or you would make one of your own based on the some analysis that you have used in the past, and you notice that is working in that direction. And yeah, anyway. Now, like I said, when to trade, I just specified. So you are supposed to trade best the pairs that belongs to their sessions. Have that one. Like, yeah. So in this case, we have the pairs and what to trade. Now, since we have the agenda, let's go and take a look at the application of that agenda. Okay. Now that we understood the sessions that we have, the type of traders that we have, in the paper and everything surrounding, the agenda, we are ready to build our trading agenda. So we just have to discuss first about the support team and accountability. And I'm going to give you, all these. So for the trading agenda, you are going to need support team, knowledge of the types of traders, session times, and best pairs to trade, which is this part from here. And lastly, we will have the accountability. So, in my opinion, I would say kind of the most important is going to be the support. And maybe some of you are not going to fully agree with this one. It's in the end, it's an individual, but psychologically speaking, I do believe that, and from statistics as well, I do believe that it's kind of the most important. So the first bullet, in the end, let's say, it doesn't matter your situation. It doesn't matter if you are married, single, or in the middle. You will always need a support team. And there are going to be days when you will not feel like following your agenda, or you are not going to follow your plan, or you are not going to give a fuck about what's happening, and you just want to waste your money. Yeah, some things like that happen because you are a kamikaze person. Yeah, it can happen. But that's what your support team is going to do for you. It's going to help you and keep you on the track. It's going to motivate you, And at the same time, although I call it a support team, it doesn't have to actually be a team of people. In general, I recommend to have a couple of them that are very close to you, and they can be your significant other. So I am going to write here. Significant other, family, or trading partner. Or trading partner mentor. Both of them can work. And if you are in a serious relation, it might be best to have the support and stamp of the approval of your significant other. Otherwise, you are going to have a bad time, both of you, And if your support team consists only of traders and there are 4 of you, sure, no problem. You can help each other. You can be a group. If you have a community, sure, it can help as well, in this case. Now, for the support team, this is a little bit external. So maybe if you have your loved ones right now or people important to you next to you as well while you are watching this video, or at the same time maybe if they don't, I do suggest you to give them this next message. So as a support team, you have to remember that your job is to support, aid, and hold accountable the trader. This does not mean that you are going to get upset when he's going to have losing trades, to point out his flaws, or anything that would include belittling of the trader. The best path to learn is self-discovery and a complete trading plan. So with this one, of course, you are going to have that stability, that through statistics, things are going to work great, but that doesn't mean you are going to win always, that's for sure. So holding the trader accountable does not include analyzing every losing trade. Holding the trader accountable does include making sure they show up in time, they have a full set up plan and they are following, encouraging them to check down the pairs they have chosen, supporting the practice, listening to them, and so on. So you have to be there as a column for him. You have to be a support. When he's going to have a bad time or a bad day, you are supposed to help him and lift him up. You are not supposed to drag him even further, and piss on him and put him down. He's already miserable and he's already feeling bad, and he's not going to need to feel even worse than that, So you have to understand that, because I know when he's winning and when stuff like that, things are going great and he's the best in the fucking world. But when he's having a bad days, I noticed more or less around Safeguard, I have a good support surrounding me, my fiance, my family, my friends, and my mentors as well. But I don't know what it's like as well, when I was in the other part of my life, for example, in my childhood and things like that, when I didn't have those stuff entirely. So I know how it is, to be alone in this world. And yeah, it's make you stronger, but most of the times I can put my hand in the fire that most of the people, they are not like me, and they will break down. They will break down and they will go worse and worse. But yeah, there are some exceptions. Always there are some exceptions. So yeah, if you have a good environment and you have a good social attitude surrounding you and stuff like that, I can guarantee for sure that things are going to go to be better, in the future. But you have to have that patience, and yeah. So yeah, let's move on. Like I said, let's move on now in the accountability. Like I said, as a trader, you must remember to schedule time to hold yourself accountable. Like you must remember to hold yourself accountable. What does it mean? So you'll have to analyze your knowledge and how you apply that knowledge. So yeah, I'm going to tell like this. So it's very, very important step on the way of the improvement. So if you are not going to schedule time for you and for analyzing and reviewing, that honestly you are not worthy to be successful, and you are kind of lying to yourself, and yeah. So as well, with all the analyze, of the weekly or maybe monthly, at the same time you have to reevaluate your trading plan and make adjustments when they are needed. Like maybe sometimes some strategies, they tend to stop working. It's normal. Market is moving. It's a continuous movement, and yeah, you have to be dynamic, and you have to be able to adapt to any situation and condition they are going to be presented in top of you if you want to succeed in this market. If you are a static guy, and you are passive, this is not your environment, and I can guarantee that you are going to have a bad time if you don't have this type of skills, to say like this. Also, at the same time, another important aspect of the accountability is not getting upset if sometimes, your support team is going to point out your luck, So sometimes, I understand when you are struggling with your trading and we don't want to hold ourselves accountable, and we know that we don't like the results for of the analysis that we are going to make, but this is actually the time when the support team and accountability is the most. Like If the results of our trading are undesirable, you must consult, with either our support or with yourself as well, and look on and reanalyze and reevaluate the trading plan and look into it. And instead of getting upset of receiving the blame or blaming them for giving you that performance or review, you should look into yourself. And I do understand that also most of the people which are failing in this market, in this situation, they are very, very egocentric persons. And I understand you have a big ego. Yeah, I have a big ego as well. But if I am wrong with something, and I am being proved wrong through facts, through data, and so on, then I shut the fuck up, and I take it on. Yeah, okay, sure, you're right. Yeah, okay. What can I do? The next question is going to be, okay, what can I do to improve on that? And if that guy is going to call me, oh look, you see, you could do that, you could do that, you could do that, then yeah, sure. I also I have to say I enjoy having a positive, constructive criticism. If you are just going to fucking show me, oh no, motherfucker, no, you did that wrong, then I'm going to get fucking angry. Yeah, of course, because I'm a very explosive person. But if you are going to come to me with arguments and facts and tell me, look, maybe you did that wrong because you didn't took in consideration, for example, the release of the CPI statement or the non-farm payroll statement or stuff like that, and maybe you shouldn't have been in a trade at that moment. Even though you are winning, you should have known that when you have this type of stuff, you are going to have a lot of volatility and blah, blah, blah. This type of stuff. So, yeah, sure, I agree with that. And that's how in general it has to be. But yeah, unfortunately, most of the people as well, I have to say that they fucking don't have this capacity, to say like this. But yeah, anyway, we are here first to try to improve ourselves and to learn for ourselves, and do and change what we can from our side and what from our point, because in the end we cannot change the mentality of other people so easily or their actions. Yeah, you can tell them, but in the end it's still their action and still their decision if they want to change or not. But what we can do instead is for ourselves. We can change ourselves and we can improve ourselves. So yeah, now since I put this one, like I said, for this accountability, you can make, for example, a monthly review, a weekly review, a bi-monthly review. It's up to you. But at the same time, it's this that you shouldn't expect that all these stuffs, they are going to last forever. Instead, I repeat one more time, you have to be dynamic. And if the situation require you, to have a change on the mentality or stuff like that, then you should be able to do it. Now that we have all the examples, better said, now that we have all the data, from the trading I'm going to make you an example agenda, So we are going to have Salome, hi. So we are going to have, this agenda for as an example. So like I said, so we have the support team. In this case, like I said, it can be the wife, it can be the brother, it can be a partner, or so on. Then, for example, like I said, we have the pairs to trade. So in this case, let's say, for example, I want to trade GBP USD, Euro USD, CHF USD, GBP Japanese, and stuff like Euro, just to name a few. Now, in terms of the, what type of personality I want to have, well, pues I want to trade, trading time. Well, it's going to be, for example, I want to trade at London opening. London opening until London close. I say like this. I want to trade, and maybe, for example, at the same time I can tell here, yeah, but for example, I don't want to trade Friday. I don't want to trade, or Monday, or so on. Like those type of things, they can also be applied. So yeah. Now, like I said, this is going to be our training and so on. But then, for example, you would have review time. So, for example, Saturday or Sunday, I will review my trades, 1 or 2 hours. Let's say like this. For example, at the same time, each end of month, I will review my trades and stuff like that. One moment, please. So yeah, that should be, you know, for the small plan that I have in this case. So yeah, in this case, like I said, with the new with this agenda, we will have our initial role set up, you know, but that doesn't mean we have a complete trading plan. You know, we also have to apply to it the risk management and the factors, the fortunes, and so on, which are going to come now. So now let's go and start designing the fortune. Make a design for the fortune. Okay, so in this case, we're going to have this one. So now that we have the trading agenda, it's time to take the next step in building our complete trading plan. So we need to set up the risk management rules, learn how to grow the account, and at the same time take advantage of the tools that there are available both for technical and fundamental point of view. So in this case, in the design for fortune, we are going to have the risk management, and in the risk management is going to come the risk appetite, the cost of doing business, risk per trade, risk per reward, and of course the contract size. So the risk appetite is going to be is the amount of money a trader is prepared to lose if a trade go wrong. So, like for example, initially I recommend 2%, 3%, maybe something like that. However, you can have greedy niggers. Wow, sorry for that. I'm sorry. You have greedy bastards that they can go for 10%. So yeah, it depends. It depends. It's important to know that if you set if to set, you know, your risk appetite using percentages, you know, of your account balance. So this way you should never lose your account. You know, like you don't want to have your risk appetite to be 100%. So yeah. At the same time, we have to understand the cost of doing business in order to be able to plan our risk management. So in Forex, the cost of doing business is a predetermined amount that when lost, we stop trading for that day. But just because we stop trading does not mean we are done with our terminal. We can still demo trade, we can still practice, we can still watch videos, and so on. So your cost of doing business in this way is directly related to your risk appetite. So if your risk appetite, let's say, is going to be 10%, then your cost of doing business would be the currency amount equal to 10% of your account balance. You know, so it's kind of equal to the risk appetite. So yeah, one moment. So let's say, for example, we have a risk percentage of risk appetite of 10%, and we are losing, let's say, we allow ourselves to lose a maximum of 5% per trade. So because of this, you know, we can allow ourselves to have only two losses, and after that we should kind of stop the trade for that week. And at the same time, I suppose that day, sorry, but at the same time I kind of recommend to have a stop and a limit, you know, for month as well, and for weekly as well. So let's say, for example, maybe 5% a day, and 10% a week, and 15% a month. Some reasonable values, you know. So yeah, something like that. It can be done. But yeah, once again, like I said, in this case, you know, like, I have to remember one more time to never trade more money that you're not affordable to lose. You know, because yes, I understand you have possibility of leveraging and stuff like that, but you should be very careful with that one. So you have to determine your risk management rules and practice them in the demo account until you became, like I said, a proficient trader, or you are using statistics or stuff like that that's going to prove that. So in this case, I want you to understand as well, like, yeah, this proficiency is going to come, but at the same time, what's the risk reward that you are going to have, So in this case, for example, let's say risk per trade, like I said, in this case 1-2%, of our capital, stop loss. For example, for forex or for stock market, let's say maybe 5%, stuff like that, like I said. And we can put here, for example, maybe a maximum of 5% loss a day, 10% loss a weekend, a week, and 15% loss a month. So if you are going to reach these values, you are going to stop trading. So we stop trading. So now, instead of the risk per reward, yeah, you have to understand the ratios and the win percentages. So here is going to have the win percentage plus ratio, of that risk reward. So let's say, for example, you can have a 90% win rate, and you win $1, but 10% to lose $10. So this is kind of, but instead, for example, you can have to win 2 win rate to win $2 and 50% to lose $1. So this is, for example, this is going to be the equivalent risk reward of 1 to 2 and 50% win rate. So in this case it's 10 to 1 and 90%, so I think it's something like this. So in general, for me, a very good one, a good ratio. You can go 40% win rate with a 1 to 3 reward, risk reward. At the same time, maybe 50% win rate with 1.5 risk reward. These are very good, not very good, good to very good, like 7.5 on scale to 10, I believe. It's kind of what I like. So yeah. Now, how to calculate the contract size? Well, for this one, you're lucky. There are so many calculators. You don't have to do it manually. So to lose time, like for example, you put here calculator, FOREX lot calculator. We can just go, if you want, in the baby pips one, position size calculator, and let's say you have, for example, $1,000 and you want to risk 2%, and I don't know, let's say 20 pips. So in this case, you can see it's going to calculate you entirely what you need to do. So in this case, for example, you would need, for 20 pips, you would need 0.1 lots, standard lots, so with this one, yeah, so we can use, going to write it here. So for contract size, we can use a position size calculator, and at the same time, some of the brokers, they already bring it on, but if not, you can always do it this way. So it's not something very hard. Now, instead of the application, let's go with the application of the fortune. So now that we have that agenda and we have a basic understanding, of the risk reward and all that stuff, we are closer and closer to have that full trading program. So now we have to understand that if you want to look and you are looking to become a full-time trader, and you are going to provide little extra for your loved ones, we need to also have a plan for growing our account. So in order to make money, we have to design an application for that stuff that you have in order to use it for ourselves. So In this case, the benefits of having a design for the fortune, is going to help you break down, the next steps. So, this way we will learn how to methodically increase our position size. At the same time, we are going to overcome psychological barriers, easily reference risk compared to account size, develop discipline and overcome greed, and easily recognized goals. So we have these ones, but by applying this risk management and by having the data and the statistics into it, it's going to help us understand when we can be able to increase our lots. And like for example, like I said previously, instead of 2%, maybe we can use a 2.5%, or instead of 1%, we can use 2%, so on. And this way, by seeing that the things are working most of the times, we will have that statistics to prove us. It's going to help us overcome the psychological barriers, and at the same time, while doing all of this, it's very easy to see, how our account grow, but yeah, most important, but this one and this one kind of goes together. As long as we are going to do all these stuff and we are going to respect these plans that we have from here and from here, it's going to help us as well. By the more practice and the more capacity we gather, it's going to help us to be more disciplined and overcome that greed factor, which many people tend to have. So yeah. So you see, in general, the problem comes that you are at the beginning. Imagine you are at the beginning and you start to have 8 trades, 9 trades, and so on in a row, and you start to increase that risk over and over again. You only need to then have a bad trade, and you are going to lose all the gains that you have, from all these trades. So that's why you have to understand when to do all this stuff at the same time, So yeah. Give me a moment, please. Yeah, we enter. Yeah. So in this case, we are going to start now, because we kind of have the initial plans required for it. Once again, of course, like I said, this is more from the psychological and risk management point of view. All these types. Of course, we still have if you want to be technical trader or fundamental trader, and stuff like that. So I want you to understand this from the beginning. Now, in terms of the everyday drills, yeah. So the most important here is that we need consistency, and we need to be steady with what we are doing. So by repeating those stuff over and over again, we will be able to understand what we are doing wrong, what we are doing good, and we should keep, and all these stuff. So for this, like I said, I recommend you that, let's say for example, you put yourself, let's say an example, for the next month I'm going to use X strategy. It's up to you. For the pairs and time frames I explained above. In this case, like I said, this is going to be a risk management and psychological factor, and after this one I'm going to explain some of these strategies and how to use them, but that's going to be another course. So let's say we have the strategy, and now that we have the strategy, let's say for example we take Euro USD and we trade it for 2 weeks every day, or as long as we find opportunities. If you are not finding opportunities, you shouldn't, you shouldn't trade it. That's another rule, so give me a moment. So in this case, what we are going to do, like I said, we will commit to show up, during those days and hours we plan initially to. At the same time, we will journal all our trades, and on the journal, like for journal, the directional bias. So then we will have the strike points or key points, candle formations. Sorry, this is drills. So this is kind of like extra, like extra work if we don't have trades. So let's say we are trading, like I said, initially Euro USD, but although initially we don't trade, for example, Australian dollar, New Zealand dollar, we are going to take a look into it, and we are going to see, how it's behaving compared to the news that is being received, the key points, the support resistance points that we have into it, the candle formations, and all this stuff. So now in terms of this plan, like I said, you do this for like 2 weeks. After that, after 2 weeks, we are going to make a review, or maybe let's put better 4 months, 4 weeks. We are going to make a review, and in this case, you are going to see, for example, my losing trades were around X hour because of X reason. Maybe I should change, or I shouldn't enter at that moment. And at the same time, you are going to have those indicators, that you are going to use, and those strategies. Maybe sometimes, maybe this strategy needs to be changed to a new one, preferably one that you were doing in demo during all this time. So you should always look for something new and innovate yourself in case things like this are going to happen, So, and then repeat, and repeat. Yeah. And now I know that, let me search for it. So, if I will enter here. You can also find, I'm going to give you this point, similar data here with this article. It's kind of explaining you the same, and yeah, it's not quantum science, that's for sure, but yeah. going to write this in my channel. So you can join from here, and you can find all this data that I wrote here. You know, I wrote it in the channel, and to find it, moment. The fuck? Looks like too much data. Yeah. So I'm going to, like I said, going to be here. If you enter in that trader live, I don't know, I had a crash. So yeah, if you go here, you can find here the quick notes that I wrote about this course. So yeah, I hope you enjoyed, and see you on the next session.